Well, let's move on then. We have Abhiram Eleswarapu, the head India equity at BNP Paribas, who joins us on the show. Hi, Abhiram. Good afternoon. Thanks so much for joining in. Well, as you join us, the IT index has moved to the low point of the day. You have stocks like Tech Mahindra, Infosys, both of them are slipping a little bit. But I believe that you're looking at some of these IT services names, and you're seeing the ones that have a good order book, you prefer them. How would you approach this lull that we're seeing? Would you buy into the dip?
Well, let's look at the space overall year to date. IT has actually outperformed marginally. And this came after a pretty big sharp run-up since the last results. Now, going ahead, really, I mean, the crux of the matter is that execution has been slow. Client decision-making has not been as good as expected, and that was what was seen in the results that have come out so far. But I think investors are also focusing on the order book. And order books have generally been healthy, and they're only getting healthier. In fact, in the past month or so, you've seen some very large deal announcements. Now, the other thing to bear in mind here is that, and after all, this is a global sector, is that rates are probably peaking globally at the moment. And as you start to see yields come off in the US and elsewhere, I suspect that macro tailwind will also tie in back into better decision making and hence in the stock prices. So in a nutshell, we still remain constructive on the space from a longer term perspective. I mean, there are a lot of long-term tailwinds in this, you see, starting from AI to whatnot. And so we are positive. A near-term lull is not ruled out.
Okay, near-term lull. Let's see if any of the other companies will say anything different, will add a little bit of excitement after TCS's rather dull commentary and outlook. Abhiram, so okay, let's try and focus on brighter things. We are at the cusp of the festive season. And I think early channel checks indicate that at least retailers, whether it's autos, overall retailers, are really expecting a good showing. What's your sense on the consumer discretionary space? Do you like it?
Yes, we do like discretionaries. In fact, we ourselves conducted a series of industry checks over the past month or so. And what seems to be coming out of that, at least for me, is that B2C brands are making a comeback. So you start to see that in washing machine, air conditioner, and those kind of sales. And therefore, some of the picks that we have across a broader theme that we call Affluent India actually involves 2 or 3 large consumer discretionary names. Now, the festive season is also very critical for the auto space. But here again, I think we're getting divergent commentary. While the Affluent India is continuing to spend, and that includes four-wheelers and higher-end bikes, what we feel is that demand at the entry level may still remain muted. I mean, there are 2 factors, festive season aside. There's also the accumulated inflation that's come in. Commodity prices have again started to rise. And also incomes at the lower end of the chain have not really picked up as expected. And therefore, you continue to see this K-shaped recovery that we've seen over the past, let's say, not just 1 year, but maybe even longer. And therefore, autos being the second festive thing, I'd focus much more on four-wheelers in that space.
So in consumer discretionary, you like four-wheeler auto names, you like some washing machines, some AC players. What about jewelry companies, apparel, footwear, QSR? Where do you stand on them, and what do your channel checks suggest for the demand trends for each of these segments?
Yes, in fact, one of the recent pieces that our team put out was on Affluent India, and they kind of concluded from that the income and the tax brackets have significantly changed over the past decade. In fact, the past 4 or 5 years as well. And what we're seeing here is that large chunks of population are actually jumping up in the tax brackets much faster than what they expected. And they kind of identified this and brought it down to about 35 million Indian households that they think are disproportionately spending on consumer items, especially the discretionary side. In fact, all the sub areas that you mentioned, starting from footwear to jewelry to even financial services products, feature in our list of preferred names. Now, I think there's a little bit of a question there in QSR where we actually saying Maybe some parts of QSR do better than the others. So that's one space where we're kind of a little bit more careful and picky in the stock choices. But otherwise, all these themes fall pretty much into a long-term thesis that we have on India. Now, out here, I think it'd be pertinent to mention that the market itself is trading at 20 times forward earnings. It's not the greatest time to put in fresh money, if you ask me. And I think the last time I was on the show, I did mention that large caps are probably better off than mid and small caps. And that was also to do with building in certain safety in the portfolio. So when we talk about affluent India, we're talking from a long term, that's a 3 to 5 year perspective rather than a 3 to 6 month view.
All right, Abhiram, what about the themes that have worked, defense and railway? Continue to like that?
Yes, we still like we still like them. Now, I think again there a little bit of caution comes in because now we're also headed into election season. We have a 3 to 6 month window when you normally tend to see a little bit of a slowdown in activity. So industrials is not the hottest space for us at the time, for the time being at least. We're focusing much more on consumer-facing sectors for now, and that, by the way, includes also private banks, which is also, in our view, actually a retail play more than anything else.
Okay, so that's on banks. Overall, Abhiram, if you could just expand on how are you approaching financials? What parts of it are you liking? There's this one constant debate about how we'll see probably margins compressed. So are you opting for, say, NBFCs or, I don't know, asset managers? What's your entire strategy on BFSI?
I mean, we do think actually that this whole margin concern is a bit overdone. And some of the math that we did suggest that it's not going to really impact our estimates in a big way. But if you step back and see, large banks have been the biggest underperformers year to date, at least the index by itself, probably the biggest underperformer year to date. And if I'm here trying to get a little more cautious on the market and talk about how we should bring in more safety into the portfolio, I'd actually look at the ones that underperform the most. Private banks are in a good space. In fact, they offer value, at least relative value. And one of the things that strikes me is that deposit growth has been very healthy, 12, 13% growth. And that in itself is fuel for further growth, which means that private banks could report upwards of 15% growth, maybe close to 20%, if not more. And so therefore, this earnings season especially, I'd be focusing a lot more on the private banks. The other thing that I kind of mentioned in the past as well is insurance. Insurance companies have done well in the past 6 months or so, especially after all the fears of tax or regulatory related issues went away. But even there, you've seen kind of very divergent performances between the various insurance companies. And the underperformers in that rally are actually the ones we're focusing on at the moment.
Okay, looking at the underperformers in the insurance space, even LIC, or are you looking at the private sector insurance companies which haven't performed?
Well, at the moment, we're focusing on the top 2, 3 maybe names on the insurance side.
Okay, but the top one includes LIC as well, right? In size. So that's also a stock that you're looking at.
Yeah.
All right.
But I don't
do you want to quickly?
Specific, but yeah.
Okay.
Interesting.
Do you want to also tell us some new, fresh ideas that you're looking at BNP Paribas? Any reports which you've come out where you've initiated coverage on some stocks in the last 2 months?
Well, I think the biggest 2 things that we've been going out with is number one, the affluent India aspect, which I mentioned to you already. And the second bit is on consumer durables. And going into the festive season, especially, I think is a great time to start looking at some of these names. These are the 2 ideas that we're running with. From a macro perspective, though, what our teams around the world are talking about are about rates peaking globally. And especially if you see the minutes from the FOMC as well, now, what it does suggest is that monetary conditions are already seen as fairly tight, and therefore the chances of a further hike anywhere is looking increasingly unlikely. In fact, you'll probably start to see rates come off globally, and therefore that could actually aid bonds and less so equities. So going into the rest of the year, actually, I'd be a little more cautious if you ask me. And one of the things that I've also kind of felt is that index targets have already been hit. We're still not at the end of the year. And this is usually an indication that you want to go a little slow. So I think safety is really what we should be focusing on for the next 2 to 3 months, and then take it from the new year after that.
Okay, that's sane advice, sane thoughts. And I think sanity is always good to have, right? It's been quite a year for the market. Thank you very much, Abhiram, for joining in. Good chatting with you as always. We look forward to the next one. You have a good rest of the day. We'll take a break on that note with the news that we have just rounded up close to 3 p.m. There's not been much of a move on banks just yet. We'll get up the bank nifty for you. It's still, flattish, 0.1, 0.2% up. The nifty, however, continues to cool off, 26 points lower. Banks are very range-bound, at least for the time being. We'll take that break, come back, keep tracking the 3 p.m. moves. And, of course, we'll also tell you what's happening in dealing rooms. What is the chatter like today? Nimesh joins in.